Good morning, everyone. I'm Ed Parcaut here with Mike Kelly, and we're Real Estate Jerky Daily. You
Sorry
gotta
for the
change
cough.
that Real Estate Jerky sign there.
Which one?
The one that says just Real Estate Jerky and not the Daily.
Oh,
Yeah, we can get that done.
I'll do that later on these with the brand thing, huh?
Yeah, well, got to do some other things before just the brand things.
What do you got for us today?
Nothing. There's
I
not
got-
anything out there.
I got a little bit of numbers, but you got some stuff over here. I see things.
Well, you
some
know-
of it we talked about yesterday.
Right. We'll go through that. But first, stocks are higher today. Shocking. Bonds, where are we at right now? I don't remember. We're down about 12 basis points, which is not that much. We've been going up and down all day. Just because there's been some key information that came out today.
What was the key?
Well, the first initial jobless claims, right? Usually comes out on Thursday, but because of this week, it's coming out today because there's no news tomorrow, no news really on Friday.
There's just
No news. Just the news on Friday
is
is
very
like,
full belly.
and dealing with people who do the Black Friday thing, if you can still call it that. Initial jobless claims fell to 209,000, lower than expected. They thought it was going to be. So last week we were higher than expected.
Right.
Right. Continuing claims also decreased at 1.84 million, which is still showing the trend is rising, but that was actually lower than they expected also.
What the hell?
What are you going to do?
I don't know. Punt.
Punt. Yeah. All right. So an October report came out for durable good orders that fell by 5.4%, more than the 3.1% expected drop. So core durable goods, soft performance with a downward revision for September. What does that mean? Those are still key things out there that are little fissures out there, showing weakness out there.
I'm in the room, so you got to be careful when you say things like soft performance.
Okay, TMI. Yeah. All right. And then Fed minutes came out, and they were like, recent weaker data. They were like, includes weaker job report, cooler inflation data. Some of the members suggest balance sheet runoff, meaning could continue even after federal funds. What that means is they don't buy more mortgage-backed securities. They just let them fall off and not replace them.
Gotcha.
When they come, due. And so, now speaking of mortgages, and George trying to get into the studio. Can you hear him hitting the door?
Yeah.
With his big ass head.
Go back to the fire, George.
So back to mortgages. So what we found out is that people age 65 and older own the largest share of homes in the United States. I was surprised. That's pretty big.
I've got 3 more years.
And so they have 33% of the 84.6 million owner occupied homes in 2022. So remember that there's more than 84.6 million homes, but those are owner occupied homes.
Yeah.
So if you need a number to figure out how many owner occupied properties in the United States, there's your number, 84.6. Write that down somewhere. So if someone asks you, you can sound like you're smarter
than the average bear.
Exactly. So that's up 4.6% from 2012.
Okay.
So in prior to that, in 2012, there was 25.4 million homes a decade ago, and now there's 33.3 million single family homes and condos that are. Oh, hold on, let me back up a second. I'm in a totally different world. So in 2022, there was 40% of U.S. homeowners own their homes outright.
Okay.
And of that,
that's a big percentage. It seems.
It was huge. That means, we've been saying a third, right? And then 2/3 have mortgages or less than that, So that's why people aren't jumping to sell anything. 65 and older are like, my house is paid off.
Yeah, I don't got to do nothing.
Well, not all of them have it paid off.
All I have to do is arm myself.
All I have to do is just sit around and do nothing.
Yep.
So in total, you got 33.3 million single family homes and condos that are mortgage free, which is a 31% increase compared to 25.4 million a decade ago.
Wow.
But a decade ago in 2012, you can get some houses pretty cheap. So,
well, and those 65-year-olds are only 55.
Shocking numbers.
I just had to go there.
Yeah, of course you did. And one of the things they were saying, this is what threw me off. They said this is worth noting that this figure does not include the youngest baby boomers aged 59 to 64
in 2023.
Right. So basically, there's a lot more.
Yeah.
is what they're getting at, but they just went off of 65 and older. So there's, people turning 62 each day is a ton of people. So there's a huge population right here we just talked about that could really do a reverse mortgage.
Call me.
No, I'm just saying there's ways to get around giving money,
to the government.
Exactly. And to your family, give it to them earlier than later.
And so you can enjoy it with them.
Yeah. Or just have a nicer life and not have to worry about things.
Yeah. Hey, what? Okay.
Hey, what?
So we talked about VA yesterday a little bit, right?
Yeah.
Did you want to talk about some more?
Sure. Let me just next week key events, and then I'll go there.
Okay.
So Monday is new home sales. Tuesday, Case-Shiller, FHFA. Wednesday, mortgage apps. Third quarter GDP second read. That's when they relook at it, see if anything changed. Thursday is initial jobless claims. It's always initial jobless claims. And PCE, which is producer. I can't even talk today. PCE, which is the favorite mortgage. I mean, not mortgage, but favorite indication for the Fed. What's going on with that's their favorite one, not the PPP, not the PPP, PPI. Producer price index, not the consumer price index, but the PCE. And I'm just got to take a day off. I'm telling you.
Yeah, you do. What's the? I can't remember. I'll figure
producer. Anyway, I'll come up with it. Google it for me real quick while I keep talking. All right, so I'm going to go back to yesterday. We talked about the VA, Department of Veterans Affairs, paused VA foreclosures for 6 months. Okay. I don't know if you're listening, if you'd heard that yesterday.
Yes.
The decision followed an NPR report that found that 6,000 VA loan borrowers are facing foreclosure, and 36,000 were delinquent on payments.
36,000.
Yeah. So, and what was happening here is they were like, VA was like, well, sorry, we're done with the program. Too bad. So a lot of people had, I mean, that's basically what they said, we didn't issue this house with you when you got out of the service.
Right.
So then, because there was a veterans partial claim payment program that allowed them to put all these payments at the end of the loan, up to 12 months at the end of the loan, and they could just keep going forward right there. But they stopped the program, and all these people are like, okay, well, now you got to do a forbearance, or you have to refinance this at a higher rate. And so a lot of people are getting ready to lose their homes. So thank God that the VA stepped up and said, okay, no more foreclosures. We're going to work through this.
Good.
So if you have an issue, if you're a veteran, if you know a veteran having an issue, have them reach out to the VA and also to their servicer
and get that thing fixed.
Tell them, hey, I just heard this.
Yeah.
They just said no more.
That's a good thing.
No more.
Yeah. That's a very good thing that they're doing. Hey, personal consumption expenditures.
That's I'm telling you, having a holiday week kind of throws things off sometimes.
Well, plus there's so many PCE, PPI, PPC, CDY.
Well, it's like PPP.
Yeah.
Right?
PPP.
Were you the one that told me this, that someone saw a BMW that said, oh no, it was on Varney. So the guy had a license plate said PPP, like thanks PPP. Remember everybody was giving out those loans?
Oh yeah.
During COVID.
Yeah.
So he bought a Beamer with
his COVID dollars.
Yeah.
Son of a bitch.
So again, if you're a veteran, it's pushed off until May 31st, 2024. So you have about 6 months to get this done.
So get it done.
Correct. What do you got today?
Don't put your head in a hole like an ostrich. I've got this.
Did they really put their heads in holes?
One.
Or is that just made up?
One got seen with their head in a hole, and they were probably looking for a rodent to eat. Look at. Can you see that?
Let me make my screen a little bit bigger.
Yeah, I can see it.
It looks like those are the same numbers as the last week. Come on, get to this week's numbers.
This is through today. But what's interesting, there has to be some closings that happened from last Wednesday to this Wednesday. But this is showing that the numbers are exactly the same of 2877 closed escrows since January 1, 23.
This is through the MLS, right?
Yeah, through the MLS.
So maybe they just haven't went in there and adjusted their numbers.
Well, it could be. They're all on vacation. Oh, I forgot to report a closing.
My assistant was supposed to do that. No, they're not.
You got like 3 days, so you just fudged the date it closed. Man,
are you giving the information out how they should do it?
Yeah, I mean, what does it matter other than you want a very up-to-date database? But sometimes things happen and you forget to do it, or TC forgets to do it, or your front desk person that's supposed to be
TC
doing
would
it.
be the transaction coordinator.
Transaction coordinator. She's a transaction coordinator.
Okay, dude.
Not too
Some
much
of us had
cocaine
a
this
lot
morning.
of I've had
Actually,
something this morning.
1 cup of coffee so far.
That's some good coffee.
It is. It's
yeah.
it's
I didn't
just a
jump. I
Costco
would have been
brand.
more on it if I would have did my cold plunge this morning.
Yeah,
but-
you should have. But you said you have plenty
Yeah.
of minutes already.
Yeah. Well, yeah, that wasn't the whole thing. It was just a little bit later that had to deal with the cameras and everything else this morning because I'm still having issues.
Oh,
and I don't have a tech guy to do cameras.
And you slept in.
Hey, I did not sleep in. I might have slept later than I normally do, but that's not sleeping.
Not sleeping in. Sleeping in is 1 o'clock.
Sleeping in is like 8 on a weekend.
Oh, I don't know if I could do that.
I can when I don't go to bed early.
When you stay up late, I
Till
still get up
3.
at like 4.
Yeah. Well, when you go to bed at 2 or 3, it's hard to get up at 4.
Then you just don't go to bed.
Yeah.
You know.
All right. So
That's pretty much it.
Yeah. So I just was surprised at how many people 65 and older own, in their house free and clear.
Free and clear.
Yeah. And again, we go back to why things aren't moving, and it's only death, divorces, and job transfers is because people do not have to.
Right.
And rates are not really moving. There's kind of, just fluctuating a little bit up and down each day, but not majorly moving one way or another right now. So
yeah,
I would get moving if you're going to do anything.
Wise words from you. Get moving if you're going to do something.
If you're not going to do anything, just do nothing.
Because
I've had people who reached out and they want to get qualified,
Right.
and then they go, man, the payment on that place. Yeah, well, that's how it normally is. And I explained to them, I said, here's the difference. Prior to COVID, right, and all that pandemic that we were through, when you were buying a home, you're like, okay, my payment's $600 more a month. I don't know if I can do it. Okay, I can do it because I made a few payments. And then that whole 2.5, 3 years happened, and it was like, wow, it's way cheaper than renting. And then it was same as renting, and so it was no big deal.
Yeah. Now it's a little bit more expensive.
Well, it's more than that. So that's normal.
Mm-hmm.
That's how it normally is. And so people are like, but Johnny got it this way and Debbie got it. You can't do that. You have to look at where we are now. We're never going to, because I was telling the guy, we're probably never, ever going to see 3% interest rates in our lifetime.
Yeah. And the key word is probably, because you never know what's going to happen, but most likely we won't see those rates again.
Well, if we get locked up again in a pandemic, we'll see those rates again, but it has to be something like that to get there.
They keep introducing
like
new
a
strains, but I think
like a war, like World War III or something. And I'm getting slow again.
Are you? World War III may be happening. I think it's already, the first shot already rang out. The interesting thing is, I don't think the masses in the United States, if the government tries to say, hey, we got to shut you down, it's mandatory injections and you got to wear a mask, I think there's going to be a lot of birds flying around the nation on the end of people's hands.
Well, the big thing is, I'm just saying, it's to get there again, because
that's
prior
what we'd have to
to
do.
that,
Yeah.
I had done a 3.25 VA, right? Prior to that, but I'd never done a 2.25 VA or 2.15 VA 30-year loan,
right?
So prior to that, so rates went really low, but you can't go, well, I'm going to wait until rates get low. Then you're probably never going to buy.
Well,
the last time that was if you look in the 70s, 80s, you said, I'm going to wait till rates get back to 12.
Yeah. From the 21 that they were at,
and 17 and all those other, it was 20 some years, 22 years.
Right.
So you'll never own. Values of homes go up. You have to just understand this is where we are. Can you make the payment? Yes, move forward. And that's how it is. Because some people are like, well, I was going to buy a 1.5 million home, but the difference in interest rates and the payment is just so much different. Well, first of all, how much do you make? Right? Can you afford it? You're making way more money now than you did.
Right.
So yeah, you have to forget about those 3 years. Those are anomalies.
Yeah, they're not going to happen.
Yeah, so you can't go off of that. And then I think people are still trying to go off of that.
They're dreaming.
They're wishing.
They're wishing and they're praying. All right.
And that's do I have anything else? Did I miss anything?
I think
mortgage applications dropped 7.4% last week. Purchase activity increased by 4% last week. Oh, I'm sorry. That was interest rates dropped to 7.4% last week, about a 7.75 higher year over year. Purchase activity increased by 4% last week, but down 20% year over year. Refinances rose 2% for the third consecutive week. So refinances are a third of all transactions right now, and they're using debt consolidation to pay off their stuff, even though they have low interest rates.
Because we're like 2.1 trillion in credit card debt.
Yeah,
in
well,
the nation.
they're paying 25 to 29% in credit card interest payments versus, but I have a 40%.
Well,
I don't want to do.
Now you have a 7.5 or 8.
Right, but that's still cheaper than, because if you
Yeah.
average 29 and 3, that's probably a 15, right, for those numbers.
Right.
And if you put it into a new loan, it's a 7.5 to 8, and eventually you'll be able to refinance.
Exactly.
Maybe.
Well, you know, and that's how we bought homes in the past. You didn't think, oh, I'm going to buy this home and then I'll refinance sometime down the road. Interest rates dropped, and you went, oh, I think I'm 2 points better. I should refi.
Right.
Maybe not even take any cash out, but just refi.
Well, you got to remember, everything was different in the 40s. They didn't have, prior to the Depression, they didn't have a VA or FHA loan program.
Right.
They had different programs where you borrow from the bank and you only had 5 years to pay them back and everything. Yes, everything was cheaper, but realistically, I made $1 a day.
Right.
So there's everything's each 10 years changed how things were done, and now we are where we are.
Yeah,
and you can't look back. You got to look forward and move on. All right. Thank you for that little reaction.
Oh,
all right. Everybody make it a great day.
Hey,
have a good turkey day tomorrow.
Happy Thanksgiving, y'all. Enjoy your family or not.
Put your big pants on.
Yeah.
Extra room.
The expando pants. That's right. Leave room for the remote control and your hand.
Yeah. There's a lot of football going on over the next few days.
Exactly. It's going to be kind of fun.
Yeah, my game's not till Sunday.
Oh, Denver. Who are they playing?
Browns.
Oh,
it's going to be a tough game for us.
It's going to be a tough game, but it could be a win.
The Chiefs.
I know.
The Chiefs lost to 2 people. We were one of them.
Yeah, that blows me away. And that was not when you were starting to rally and do good things.
That was the start of it.
Yeah.
Yeah. Well, I just said it was because Mahomes had the flu.
Right.
And I was like, and Kelsey had sex the night before.
Yeah. And kept looking up in the stands.
No, because back in the day, in the early 60s, 70s, and 80s, they're like, okay, don't go have sex tonight before the game because you'll get weak legs. It was the stupidest thing ever. But that
only if you do it right.
Yeah. So that was, not everybody knows that joke.
Yeah.
All right.
I do.
Good. Well, of course, because you're over the age of
62. All right, kids. Happy Thanksgiving.
Yes.
Have a great time. We'll be back when?
We'll be back on Monday.
Okay.
Well, and the radio show will have Saturday, but we will actually be back in the studio on Monday. So Monday. And then all the holiday music is starting.
Oh, sorry.
And I'm on a quick move and slow down. And
yeah, you're kind of ratchety all day today.
Yeah. What are you going to do?
Yeah, we'll enjoy our day.
All right, everybody, make it a great day. Thanks for being here, and thanks for watching, and thanks for listening. Make it a great day. Happy Thanksgiving to everybody. Nothing for you? All right.
Bye, kids.
Bye.